Next up, we're going to be talking about a quick update about what is moving financial markets at the moment. Emphasis on the quick here, because as we know, there are a multitude of things that will be impacting the movements of stock markets and investments all the time. It's always a good reminder that the current level that most stock markets are sitting at are really a reflection of the expected events of the next 3 to 5 years. That's why they're currently sitting at their levels right now. But I wanted to shine a bit of a spotlight on three major things that you will have seen through headlines that are certainly on our minds as investment managers. And the first of those, of course, is the current conflict that's taking place in the Middle East. Day to day, we hear different news about the events that are taking place over there. And undoubtedly, they have an impact on the value of our investments. And more recently, just yesterday, we heard some news about an agreed ceasefire, which had a bit of an impact where markets actually rose slightly on the hope that things will calm down. Kristian, in terms of those day-to-day headlines and seeing markets kind of fall and rise based on good and bad news, would you mind just explaining a little bit as to what tends to be causing those movements? Why are people kind of buying or selling based on those headlines?
Yeah, absolutely. So I think with the Middle East crisis at the moment, particularly, the main fear that is affecting stock markets, sort of almost war aside for a second, is the Strait of Hormuz. And I think it's about 20% of the world's trade travels through there. And oil, particularly in that region. So that, if this kicks off and that trade is interrupted, huge increased costs in shipping, huge delays in, product arriving on time. The supply chains of the world are very fragile to any kind of disruption like this. It's all a bit like a military operation. It arrives in a dockyard on Monday, it's in the shelf Tuesday morning. And any sort of, if you have to reroute a boat all the way around Africa or something, there's going to be, shortages, a bit like maybe we saw with chip manufacturing things in COVID. And what I would probably remind people and clients is we have seen this quite recently with Ukraine. We saw, when that war started, markets fell, but then, over the last couple of years, markets have risen back up. So the market sort of adjusted to it and swallowed it. Similar thing, I'd say, at the moment with the Middle East. Now, hopefully, I think everyone would hope, the ceasefire holds and some sort of more lasting peace can be found, but it is a very volatile situation. So I wouldn't, worry about the portfolio too much in the short term. It's going to be more volatile, but it's just staying a course for the long term. You've kind of got the Ukraine playbook to sort of think back to, that initially, see a downturn, but eventually these things will sort of work through and correct themselves.
I mean, it's such a good point, because I think the nature and the difficulty of investing, if I'm honest, is that every time we see an event like this, as humans, we think this is different than before. This is a unique event, and therefore there could be unique outcomes. And the concern is that could be a prolonged period of poor performance. But it's such a good point to remember that these things have happened in the past, and the markets have recovered in varying kind of lengths of time, but recoveries do tend to take place often more quickly than we originally fear. And so the advice that I would always remember is just try to stay the course, as Kristian said, and just make sure that your kind of risk levels are right and your financial plan is in place, that you're investing for the right periods of time, and then portfolios should look after themselves. Perfect. And next kind of main headline or topic that certainly impacted stock markets throughout 2025 are US tariffs. Donald Trump across the pond, notoriously difficult to predict. I saw a headline recently that the majority of his inner circle aren't really sure what he's going to say, and therefore, how are we meant to? It's really, really difficult. Kristian, how would you describe kind of how tariffs have played out this year, and again, why stock markets tend to react to what's being said?
Yeah, absolutely. So we had a few months back a really sharp fall in markets with the huge tariff announcements, Liberation Day, as it was known. So sort of, seeing like 100% tariffs, then a minimum 10% base rate tariff really took everyone off guard. I think, countries like the UK were expecting to get away with it because they, kind of moved on a few things, and then just kind of everyone getting really whacked with tariffs. tariffs, the ultimate form, it just increase cost to business. So it's a tax that has to be paid. And therefore, either the business is going to have to absorb it in some way, or the customer's going to pay more. Customers pay more, they're buying less. If the business is absorbing some of it, they're not making as much money. So that's why you see markets sort of react so sharply and so quickly to those sorts of things. And then we had the sort of remarkable unwinding of lots of the tariffs and a rollback. So whether it was all just posturing, as some sort of negotiating strategy, and we saw the sort of rebound in markets. What I would say with this sort of thing is, maybe President Trump and how he generally does politics or policy is markets like predictable state characters, corporate executives and things. They have these huge budgets to plan of research, development, and all the rest of it. If you don't know week to week what rules you're playing by, it's quite unlikely that they're going to be, investing lots or wanting to expand operations in certain areas. So, yeah, there is that to bear in mind, and probably, if the risk behavior continues, probably more volatility to come. But do remember that there is only sort of 3 years left now on the presidency. So, and markets have survived all different types of presidents with, different politics and different ways of doing things. And one thing America is very good at is business does prevail through thick and thin.
Yeah, great point. And also a good reminder of the value of diversification. Having investment spread across the whole planet, it is always going to help you in times like these, because it's unlikely that a set of tariffs would unanimously impact the entire globe, because if it's going to impact a country outside of the US, you would hope that the US would benefit. You couldn't see it too obviously that it's going to impact both sides overly negatively. So yeah, another reminder that diversification is key. And then the final topic that we'll touch on very, very briefly is, I thought it would be good to have a reminder of the importance of kind of corporate earnings and how they have an impact on the performance of stock markets and share prices. Because the reality is that we, again, as humans, can get very, very obsessed or caught up with big headlines. And rightfully so. This year has included some really, really scary topics and headlines that, of course, are going to take up a lot of space in our brain. However, when it comes to investing and portfolios, they are not the only things that are driving your returns as investors. It's a really good reminder that the reason we're investing in companies is because we become shareholders, and we therefore have a right to the income and profits that those businesses generate. And I think that can be so quickly missed when all that we're doing is obsessing over the levels of the S&P 500 or the FTSE 100, because actually what we're also obtaining is the regular dividends that are paid from those businesses. And those dividends come from the earnings that those businesses make. And this year so far, many of the big companies listed on US and UK stock markets have actually reported relatively healthy profits and earnings, and they should translate into healthy dividends. And so I thought I would include this as a final kind of sobering point, that it's important not to get too obsessed with the really eye-catching headlines, and remember that through these things, you're holding and investing in solid companies that have existed for hundreds of years, and many of them, come rain or shine, will still perform well because of the goods that they produce. Any thoughts, Kristian, or even any companies that come to mind that you just think, are going to perform whether there are scary headlines or not?
Absolutely. I think it's a really good point and really good reminder of, what investing is all about. Kind of over in the US, you've got Apple, for that company really to fail, everyone has to move away from the iPhone, and the ecosystem they built is probably quite unlikely. Or we've got in Europe, big pharmaceutical companies. And again, people are always going to need medicine, always going to need a cure for something. So pretty entrenched industries, not really going anywhere. And that's what we look for when we build portfolios, diverse across the world. So any one country, tariffs, you're not going to feel the pain, but also, reliable, big, profitable companies all over the world. So, there will be ups and downs, just like anything, but ultimately, they will kind of keep going and keep moving forward over time.
Great points. Hopefully that was helpful. That's the end of this very brief market update. More of these will be coming. So keep your eyes peeled and really excited to see you next time.
Thanks for watching.